Let's talk a little bit about metals. We've got just the person to help us talk and discuss some of the trends we've seen there as well. Will McDonough, founder, chairman of Corestone Capital. Will, good to have you on the Future Show. Welcome. Many of the analysts that we have on this show throughout the year have been talking about the super cycle in commodities, metals, copper, for example. Per your notes, you're expecting to see some strong performance of the industrial metals complex, and you're saying this trend, you expect it to continue gaining momentum here.
I do. If you look back over the Biden administration, there was a big pop when the Inflation Reduction Act came out, because there was a huge surge of money pouring into green energy metals, all of the metals that are required for battery energy, for, solar, wind, any green energy supplies, but also the harnessing of that energy created by green energy supply into battery technology. So not only did you see Tesla do very well, but you saw the metals required to build a Tesla do very well. Now, as we enter into this current election cycle, and a lot of the rhetoric out of the Republican National Convention is around drill, baby, drill, oil and gas are coming back, and that's all well and good. But I think when people zoom out, you have to realize that the future of our economy depends on energy so much. AI requires so much energy. All this computing requires so much energy, cloud computing. And so what I like to do on a macro level is look just one layer deep than the NVIDIAs of the world. Everyone wants to buy NVIDIA for participation in AI adoption. Well, who the heck's going to power all those chips? And where's all that energy going to come from? And so while you see a bit of this solar sell-off that's occurred even in the last 5 days, I think that dip is a big buying opportunity. I think if you peel it back, as we say, to look at the metals required for all solar panel, for all wind turbine, that requires copper, copper, copper. And copper's been range bound over the past several years between, in essence, 3.5 and 4.5. It sits at 450 today. It hit $5 a month ago. 505 was its high. I don't see any scenario where it doesn't eclipse that and drive further in the coming 5 years. And I do think it's probably a bit overcorrected as we sit today because of people, over calibrating to a potential Republican administration.
Taking a look here at the chart, just to kind of provide a couple visuals behind Will's narrative there, the recent selling we've seen tied to some of the solar concerns. But here's that spike you were also talking about up to 519 that we saw. And here it is on a bigger picture, looking at not just the last year worth of price activity, but the last few years. You can see, again, it has been relatively range bound, unable to sustain above $5 levels. Does it concern you to see some of the data we've seen out of China? For example, it was retail sales to start the week, industrial production, I think GDP, all missing expectations and coming in below prior levels.
I don't really focus on China data because I don't trust any of it. What I try to focus on is zooming out, as I say, and the broader perspective of the lag in that copper chart that you look at. If I found oil or gas in my backyard today, I could be burning it and fueling something almost imminently. If I found copper in my backyard today, it takes 5 to 10 years before that copper is going to end up being in the usable state. And so the lag between this big surge of interest in green energy solutions, for actually the energy itself, but also the implementation of it and the harnessing of it, and the capacity to actually have produced manufactured metals in the market creates this lag that we're talking about that I think, is a big buying opportunity to participate in this future of energy.
Will, does the lag get minimized at all by the fact that we're seeing technological advances? Are we seeing that in terms of mining, for example? Are we getting better, faster at it?
I hope so, because we need to, because we're way undercalculated the demand for copper specifically, and many of these metals for this green energy future. You've seen all these global governments and corporations make these net zero goals, and we're going to be carbon neutral by 2030, 2035, whatever they're spouting off saying, which ironically happens to always be outside of the band of when their administration is going to be in power. But when you see those commitments, and when you see the global government, incentivizing like our Inflation Reduction Act, which actually I think is a sound and smart piece of legislation, all that speaks to is, innovation, which is good, and speed, which is good, but doesn't speak to the lag that exists in terms of the copper that we have produced and manufactured and ready to be used, and the demand curve. And so, if you look at EV sales and people say, oh, that's not happening as fast as we all calculated, that's fine. but every EV requires 1 mile of copper wire per car in the car itself. Forget about connecting it to the wall, connecting it to the grid, connecting it to the solar and the wind and the existing grid infrastructure. And so this is just a way undercalculated asset that I think, if any advisor puts their clients in it, even in a small way, it's going to put the kids through college.
Will that 1 mile of copper wire compared to internal combustible engine, what are we looking at there? 10 times, 5 times?
More than 10 times.
Okay.
Because, what you have to calculate when you look at that is oil connects to the car. So pop the hood of your car and look at your engine.
Yeah.
The only thing that battery is really tied to is your stereo and your starter. Whereas if you look at the battery technology that is under the hood of a Tesla or an EV, it's massive, massive.
Yeah. Okay, and so you mentioned, again, in terms of electrification, obviously one of the major themes, and that's what we talk a lot about on the Future Show. You heard me talking trend, right, as I brought you in, related, tie it to price activity, but also to some of the characteristics that feed into and the fundamentals that make up these themes, these trends that we see playing out. So electrification here, but also, again, as we've watched and seen, a part of the process here, again, has been the grid, right? The requirements that it has on that as well. So it's these automobiles, but it's also kind of keeping up with the advances and the new trends associated with them as well.
Yeah, I live in Loudoun County, Virginia, just outside of Washington, D.C., and you should see the infrastructure investment going into these data centers right along our toll road. I mean, it's an unbelievable sight to see, and all of that requires connectivity to the grid. They buy this real estate that immediately abuts power lines because the closer you are to the power line, the less copper you need to run a line to connect to the grid. And so it's a macro play on real estate movements. It's a macro play on energy infrastructure. And, that's way before we even talk about, the immaturity of our grid and its need for maturation.
Yeah, it sounds like we've got a lot of work to do, to say the least. And you're not the first person to come on the show and talk about that. Will, talk to us about, okay, so now where does some of the opportunity lie in terms of as we watch this process play out?
I think that there's going to be some rising REITs that are going to be wisely building around data infrastructure. All you have to look at the supply and demand dynamics that have driven NVIDIA up. The NVIDIA growth has not been because all of a sudden, their earnings are 100x what they were 12 months ago. It's because people want to buy participation in the future growth and the future demand for that infrastructure. Well, like I said at the top, what happens when you install a new chip, or what happens when you require all this new computing power? You require demand for energy to power those things. Where's all that power coming from? And so, like I say, if you zoom out on a macro level, all that NVIDIA demand is power demand. And people just don't take the time to look a layer deep and realize that power demand is not priced into the market. And so, yes, I might feel like I missed the NVIDIA trade. Well, look at the energy chart next to the NVIDIA trade and tell me where the lag exists. There's a huge opportunity there that still allows investors to participate in that future.
Will, excellent conversation. We don't really get into it on this level very often, but it'd be good to have you back at some point and kind of follow up on some of these trends and these ideas you're sharing with us. And we do appreciate your time this morning. Will McDonough, founder, chairman of Corestone Capital, joining us to take a look again at some of the existing trends we've seen with copper, the demand and the supply side of things.